Welcome to the lounge and the European Forex pairs, and starting with the US dollar index. We'd been looking at, yesterday we were considering a top being in place. When we spoke last time we were in here, and what we could see in the price action here was that the market was really struggling at this point. So to have it labelled wave 1, 2, 3, 4 and 5, and possibly even this 4, 3 to here and 4 to here as well. But an ending diagonal triangle can have 3 waves as the actual structure, because it's a triangle and it's corrective in nature, so an ending diagonal triangle. But the main point now is that we're looking for this wave 4 here, and the norm is for it to pull back to the wave 4 of 1 lesser degree over here. And in very simple terms, we're looking for an A wave, B wave. We'll probably may come close to retesting that again once we've got this first low in place here as the A wave. Wave 4s can get complicated, and I've just labelled this very simply here as an ABC. But we could also end up in a triangle and all sorts of things. So let's just work through it step by step, and we should be able to use other markets too to get a bit of a guide stick. But I do think it's going to be quite sort of simple, well, complex simple. This particular one here, as an A and a B and a C, was really quite simple. So this may be the fingerprint for this particular structure, except we're 1 degree bigger. So we could look at this in terms of being 60% bigger as a starting point. I mean, it could be bigger or smaller and whatnot, but I think it's just good to use those ratios to get some sort of idea, because as a market is expanding through time and space, then it is expanding, and it's got that 61.8% growth running through it. So that's the same with the degrees of structure as well. So we can expect a larger wave 4 here than here, but we could use that fingerprint here for the pattern. Okay, so this creates a pretty nice sort of simple way to start viewing the other pairs, and starting with the primary euro US dollar here. Yesterday we were looking at and reflecting back that US dollar index and calling a low in here, and then looking for wave 4 that can also pull back to the wave 4 of 1 lesser degree. So we're just, it's just a mirror image really. So all good here. It is possible, as you've seen on our website, that it's that we could have another move to here and one through to here as well, and then up from there. I don't think it's the case, but it's possible. That chart is on our website, but let's just work with this particular structure for the time being here. Now, this 1065 here is a midpoint, and it's going to be a tough little nut. And before it was support, then it became resistance. So it's got, it's going to have problems here. Also, we've got the trend line coming through here as well, but there's a few things matching up here. The current high here too is the 61.8 retracement level of this previous wave, from this wave 4 down through to wave 5 here. So yeah, there's a lot going on at this number here, and I think that we need to give that some consideration. The other point too is that wave A here can be in 3 waves or 5 waves, so that's not going to be sort of very helpful. If this was a wave 2 here, then this wave A would be likely to be in 5 waves. But being a wave 4, it could very easily, a 50% chance that it can be in 3 waves. So we really need to sort of acknowledge that. And I think that once this market moves above this particular level here, then we can rule out more downside at that point. But I think that having some type of correction across this level and then a move up into the next support resistance 72 number would be what we'd be looking for. So yeah, we're going to be in this A, B and C, and this is what we were looking at to be in this week, and it's corrective. So We don't normally trade wave 4s, but it's quite a big wave 4, so you could possibly do that. But let's just drill in here to the 15-minute chart here. So as I was sort of mentioning here, yesterday we were just counting this down here. It's all a bit sort of rough and ready, but it seemed to nail it quite well. But yeah, this number here, this 4010.650 here, this is going to be highly likely where the market is going to correct back from here. Okay, and like I said, I've got this particular A wave here in 3 waves. It's smaller A, B, and C here, but I really don't know how it's going to play out. Yeah, so but this number here will be part of that here. So you could look for a classic trading levels pattern here, and you could trade higher from that point. Just want to have a look at that on a 5-minute chart, that little trend up here. See if I can. Well, first of all, I can see that we've got wave 1 here and wave 2, so we're going to be wave 3 coming into this old high here will be wave 4, so we'll get up to there, no worries. I can see we've got 5 waves here. These 5 waves are not really developed within these structures here, but what I do see here is that, and you can see that really quite easily too, is that these are all reoccur. This is the fingerprint or the pattern, then this is a recurring pattern here, starting to stretch out a little bit. You'll notice that that this high, this little pattern here is what size it is. This one's a little bit bigger. This one's a little bit bigger. This one's a little bit bigger. This one's going to be a little bit bigger. So this is the actual, if I had a sort of a spiral thing here, would be able to capture that quite well here, because I can see that it's actually unfolding on that 61.8%, unfolding through sort of time and space, if you will, without getting too spacey about it. But these are all reoccurring patterns here, so this is really setting the tone for what we're actually looking at here. But these patterns are going to get bigger, so basically, you know, this is the ABC correction. It's just a little DNA of it, really. An A and a B and a C correction here. So far we're sort of in here somewhere. We still got to get to the top of the A wave, then the B, and then the C wave here as well. So yeah, it's all fascinating. But yeah, still, another thing, it's just because each one's bigger. You know that it's actually expanding. You know what I mean? It's not contracting, so it's going higher. Okay, sorry, waffling on about that. Get carried away. I try to restrain myself even while I'm getting carried away. Life is tough, isn't it? Okay, the euro pound, and now this particular corrective pattern had started earlier. You know, I mean, the euro US dollar pattern was just starting to lift off now, in a sense, you know, doing this kind of leg in the first leg of the A wave here. So we may be into something a bit more complicated here. Now, I've got this as an A and an ABC for the B wave, and then 5 waves up for the C wave. So it can finish here and move down. It's much more advanced in its leading, isn't it? It's simply just leading, and yeah, so an A and a B and a C here. But this, let's just get to this point here. You can trade it up, not a problem, but shorting it just in here, we'd need to gather some strong evidence for that, because especially if the other markets are going to be continuing higher, like the euro US dollar, then it's possible that I've got this dotted line here, that all of this can be a retest of 72 here, back up to this wave 4 of 1 lesser degree, and if not even higher into this 50-60% retracement level here, because after all, this is a wave 2 that we're looking at. But I just don't see that with the size of the structure yet, unless this A, B, and C here is just the A wave here, and then we have a B wave, and then we have a C wave further up. I just don't know that. So I think we just need to allow this to excuse me, just allow this to mature. we're really after the short trade. I just don't know if it's going to be from here or up here high further, but we'll be able to pick it up, but we'll have to catch it at the 11th hour, that's all. Okay. Okay, the Euro Yen, as you know, we haven't been interested in this for a little while. We kind of got the short down to here, but we're just waiting for the bounce off the top of minor group 1. So 3 is always the top of group 1, and we can always expect a bounce no matter what the situation is. Very rarely would it just go straight through this number. So we can see that, you know, we've been observing it and watching it sort of move up, but I'm still not interested in trading it. I mean, this market is not moving very smoothly at the moment, so it's probably not the one that we're actually looking for at the moment either. But yeah, let's just allow this to mature here. I mean, once it does start to move in line with the trend, then it'll scoot along a little bit. But we really don't want to get caught in this fourth wave here. I mean, just to give you an idea of this fourth wave across here got quite complicated here. So that's what we'd be sort of looking at in this space here. So I think there's better markets to work with, but you know, we'll keep tracking it. As I said before, you know, we're looking for the bounce. We've got getting the bounce now, and that's fine, and it can pull back up to the wave 4 of 1 lesser degree. Let's just see how it goes and how it fits in with the other euros as well. Okie dokie. So the next one is the cable. Once again, as you know, we're looking for a bounce off the medium level here, 150. This is a significant number, the 150, and we're getting that, and we're looking for a retracement back into the 152 sort of area here, but it's more important to track the actual structure here. So looking for an A wave, 3 waves in here for the B wave, and then the C wave in 5 waves. Then once we've got 5 waves coming down, this 5 waves coming down will give us the direction. So if we get 5 here, that means that after the corrective move here in 3 waves, also pulling back 50-60%, then we know that we'll get another 5 waves over here. So this is the area that we're actually looking for. This one will give us confirmation that we're going lower. This one will also give us confirmation that we're going lower because we'll be in 3 waves, a 5-3-5 zigzag structure as a wave 2, and then we can short that on that faded bounce there into this leg here. The next market is the pound yen. Now, this is the count that I've got here, but I also don't know if it's correct or not. I'm sort of getting the feeling that I've got this wrong, and where I would be wrong, and I think we need to just sort of be a little bit patient with this one as well, is that I'm just going to move this here because this can lead us astray. If you're short already, then that's okay, we can talk about that, but I think that this could be the situation here. I think this is and 5 waves up here and then lower through here. So I think what I need to do is just grab that here. We'll just set this now. We're going to change this a little bit. So this will be the alternative wave 2 high here. But we need to bring this one over here, and we'll just copy that, put that here, drop that out of the way a little bit, and yeah, so I'm changing the bias on this situation here. Okay, I'm just going to leave that there. Now let's I'll just need to save that. Now let's drill in here. Still saving whilst shaded out there. I've got a lot going on, so it's a bit slow. All right, 15-minute chart. Okay, if you're short already, just double checking this. It shouldn't, if it's going to continue down, then the stop can be here. I know you might think that's quite wide, but we need the market to bounce around with this here. Once this high comes in place, let's just say that we've got a bullish move going on. Let's just say that this is the low here. So the right thing to do would be to look at this in a little 5 waves here. Now, once it has that 5 waves here, then it's going to have a counter trend here. Okay, so then we can bring the stop down to this level here. Okay, I mean, it's only small, but it gets you a little bit closer. Yeah, because at that point, it can move up from there. But if it's a bearish move, it will only move down to here in 5 and then come back up into 3 here and then go down again here. So there'll be this sort of trend line going through here, so to speak. So just keep bringing it down on the highs, but don't bring it down too early. Make sure that it's actually pulled back a fair bit if you're short in that space there. Okay, the US yen, and we're looking for the bond market to roll over and for indices to move higher, and of course we would see this in the same light as the as stock, so we'd see this market move higher as well. So we're looking for a move higher now. So I mean, originally, looking at this here, this 123.3 top of group 1, very important levels, taking a long time to establish on here. That's okay. So we would have had the original, once this high was in, we would have had that there as the trigger. Then we can move it down to here, and now we can move it to there, and now we can move it to there. Now, I'll leave it there for the time being. Now, if obviously if the market moves up through here, then we'll be long at that stage. The other point that needs to be said again is that wave 4s can be complicated. This one here is really quite simple and sharp, but I don't mind that. So we could push up from here because this one here is a little bit similar to this one, different pattern, but just a straight channel, so, and then made another high. So that this can also occur here, but we also need to be mindful that we don't end up with a triangle, which would be an A wave, a B wave, a C wave, a D wave, an E wave, and then a move up from here, and that would be the triangle, and it would get a bit more complicated at that stage there. But we'll know that in due course. Okay, so this, if it's a triangle, then this high here shouldn't be taken out, so it would be safe there anyway. So that's the way I think we could accommodate most things in a very simple, practical way. Alrighty, well that's it. So all very simple and neat and tidy today. So cheers, thanks for tuning in.